Hey, everybody, it is Eric Green. Thank you for tuning in for this week's podcast. And what I wanted to do is talk to you about, because we get a lot of questions about this, the folks that we have approached to sponsor our podcast. This is the software. These are the things that we use in our own practice. And so down below in the description, we will give you links to these. But what we do, and I've done an episode on this called Dialing for Dollars, okay? And what this is call ENQ. This will get you through to the IRS in under 3 minutes. It is unbelievable, all right? This alone is going to knock off about 50,000 of billable time for us that we used to spend on hold to try to get transcripts or try to call to get a hold on collection. Go check out Call ENQ. We have arranged, okay, for a special trial for $19.95. You will get 200 minutes. So for $20, you can go ahead and test it out. Trust me, it will change the way you practice. All right. Also below, Tax Help software. This is the software that we use to go ahead and pull transcripts as well as do all of our resolution work, our offers and compromise, our installment agreements. As you probably know, the IRS has now stopped the faxing of transcripts. No big deal. If you have Tax Help software, submit the power of attorney. Once it's on file, you can go in, pull your transcripts, pull your wage and earning reports. But beyond that, you can get everything summarized in a report that you can provide to attorneys, provide to your client, that will summarize everything, including the collection statute expiration date by year, penalties, interest. You can find opportunities for penalty abatement by using that. The other thing about Tax Help software is when I log in every morning, I have a dashboard that will show me because it runs overnight, everything that has changed with my clients' accounts. Anyone that is no longer in uncollectible status, offers that have been accepted or rejected will show up before I even get the letter. Audits will be flagged months before the client receives their audit letter. Okay, it is amazing, and it will help you really get a handle on your practice and help your clients. Again, we've arranged for a 2-week free trial as well as a discount on the purchase of Tax Help software. Go ahead below in the description. Go check that out. Again, it is the keystone, if you will, of our resolution practice here. And finally, Receipt Bank. Many of you have seen the videos of me on social media. It's fantastic. Because I do a lot of speaking. I'm on the road. I was at AICPA. I was at Scaling New Heights. I will be at NATP in Chicago, the national conference. I used to jam all my receipts in my bag. Hopefully we had them all. Our controller, Susan, was always all over me. Not anymore. I take a photo in Receipt Bank. It goes in. It is logged immediately into QuickBooks with an image of the receipt. I can lose it, burn it, eat it, do whatever I want to it. It is there forever. All right. That is how you bulletproof your return. It's how you will get your clients to bulletproof theirs. Go check out Receipt Bank below. And thank you for listening to the podcast, and continue building your practices. Hey, everybody, it's Eric Green. Thank you for listening in to this week's Tax Rep Network podcast. Joining me is a very good friend of mine, and also one of the critical experts that we use at Green & Sklar's, Walter Pagano. If you don't know Walter, I don't know where you've been, but if you haven't heard Walter, because he speaks all over the country. Walter is a tax partner, and he's a tax controversy practice leader with Eisner Amper in New York and New Jersey. He has more than 35 years of experience on everything from audit, forensic accounting, consulting. He's testified in federal, state courts, as well as bankruptcy court, federal criminal prosecutions. And a lot of this is because of his background. So Walter, if you don't know him, he spent more than 10 years with the government as a revenue agent with the IRS, and within that position, obviously did civil audits, trained other auditors as well as special agents. and the applicable provisions of income tax law. He also, I think, spent time as an appeals officer. Walter, correct me if I'm wrong, looked into abuse of tax shelters. You co-authored the IRS's Commodity Tax Shelter Training Manual. If there's anything to do in forensics and audit, Walter, you've done it. All right. And just for the folks listening, we use Walter extensively in our eggshell audits and criminal cases. Any kind of investigations, piecing together books and records, recreating that stuff, which everyone thinks has vanished, but really hasn't. So it's great to have you on, but Walter, in particular, on what we're talking about today, which is cryptocurrency. So first of all, thanks for doing this.
Oh, Eric, it's my pleasure. Thank you for inviting me, and I look forward to assisting colleagues, friends of yours, people who listen to your podcast, in terms of any clarity I could bring to the current issues at hand with respect to cryptocurrency.
Yeah. Now, and I know you're giving a webinar on this topic next week, and for anyone listening, I'll put the link to that webinar down below. If you're not following this, if you haven't been, so the IRS has begun sending all kinds of letters out to what I would refer to as targets, but taxpayers have started getting letters on crypto and other virtual currency. And so, Walter, if you don't mind, Walter, you know Steve Tosher. Steve came on about 6 months ago, and we went through the very basics of crypto, right? You know, it's really viewed as an asset and whatnot. There's been a lot that's happened recently. So if you can sort of bring us up to date, like what are these mailings going out? So if anybody here has a taxpayer that gets these mailings, you know, what are they?
Well, actually, Eric, the mailings, there are 3 specific letters that the IRS began mailing to taxpayers. A taxpayer would receive one of the 3 letters. And these letters are identified as letter number 6173. Another one is referred to as 6174. And the third one is basically referred to as letter number 6174-A. And essentially, each of these letters, you know, contains the following statement, and I'm paraphrasing now, but you'll get the point. The letters basically say the following, Eric.
Yep.
Dear taxpayer, we believe that you are suspected of having or had one or more accounts containing virtual currency, and you may not have met your U.S. tax filing and reporting requirements for transactions involving virtual currency. So these letters essentially begin with the same sentence. But what's important, Eric, about these letters, essentially, just in terms of the broad picture about them, is that the IRS did not randomly mail these letters to taxpayers. Taxpayers who would receive one of the 3 letters, there was a reason why the IRS mailed a specific letter to a taxpayer. And there were approximately, from what I understand, during July and August, and maybe even continuing into September, approximately at least 10,000 letters were mailed out, and maybe more at this time.
And so basically, the IRS has a reason to send this. They have information, probably, I'm guessing, from those John Doe summonses.
I think that's right, Eric. Yes.
Yeah, and again, if you're not following, the IRS issued John Doe summonses on Coinbase and a few of the other companies in this space, looking for lists of who owned the virtual currency.
That's correct.
And what a John Doe summons is, you know, normally, I mean, many of you have probably seen an administrative, like a bank summons, right? Where the IRS says, hey, bank, give me the records on Eric Green. What a John Doe summons is where we believe you have, like with the Swiss banks, U.S. citizens, or here, you have people that own this. We don't know who they are, but we want the list of everyone that does. So the John Doe is where it's called John Doe because the government doesn't know yet who the target is, but they have reason to suspect that there are people there that they want to know about. And so these John Doe summonses went out. I'm sure they got the information back saying Eric Green, Walter Pagano, I mentioned already Steve Tosher, whoever it is on this list that owned this. Hence, Walter, you're probably right. These letters are going out to people they either know or have reason to believe had this. So for the practitioners listening, okay, the letters go out to these taxpayers. What areas of their practice are probably, I'm going to say, impacted? I would imagine that what's going to come in the door will be either existing clients that didn't disclose it or people that were non-filers.
I think that's correct, and I think the practice areas, whether we're speaking about an accounting firm, an enrolled agent, for example, who has a tax practice, or even a lawyer who perhaps is involved in providing compliance type services to their tax clients, I think that the areas of that will be impacted by these letters, and they're not mutually exclusive, Eric. I think it's a combination of tax compliance as a practice area, depending on the type of letter that a taxpayer receives, and we'll go into that in more detail later. Could also evolve into tax controversy that I know you're very conversant with and familiar with in terms of the different aspects of controversy that are not limited solely to audit, for example, but can spill over into collection. Absolutely. And also into potential criminal investigations.
And
lastly, enforcement. So I think you have three practice areas that are not necessarily standalones, that are not mutually exclusive, but actually can evolve into all three depending on the nature of the matter. So I think you have a combination of tax compliance, potential tax controversy, and of course, potential tax enforcement. And the enforcement may very well be not limited to audit or an investigation, but could very well easily also be collection, Eric.
Has Chuck Reddick said anything about this? I mean, you and I both know Chuck from before he became commissioner. What is he saying about this? I'm curious because, his firm actually is one of the firms that jumped into this space early. Steve and Chuck and everything, they were all over this, years ago when it first sort of started becoming news. Has he said anything?
Actually, he's had a few public appearances recently, different practitioner conferences. But there is a takeaway that I recall from reading about one of his statements during one of these conferences. And basically, here's what he said publicly now. He said, and he's addressing the audience. And of course, the audience is composed of lawyers, accountants, enrolled agents, maybe even taxpayers for all we know. But basically, here's what he said. And he, of course, is the commissioner of IRS. So he said, if you get a letter and your name is on the letter, and it's your home address or the address that matches your tax return, and it's from the IRS, and it's encouraging you to maybe take a second look at your return, one might assume we, meaning the Internal Revenue Service, had information that generated the letter that was mailed to you. So in a nutshell, that's exactly what the commissioner has said publicly.
Yeah.
So it's a very, very important takeaway that you didn't receive a letter randomly. It wasn't like, we sent a letter to every 20 taxpayers or 15 taxpayers. And I also think, Eric, just to point out also what you said about the John Doe summons with respect to Coinbase, not only is there information that the IRS received pursuant to the summons enforcement, but also the IRS, as you know, I know, and many practitioners, we know that the IRS has a wealth of databases. So their information flows through from so many different sources that it may not be just one source that provided information to the Internal Revenue Service that then generated a particular letter that was mailed to a taxpayer, Eric.
Got it. Has the IRS put any more guidance out on this?
Since March, I believe it was March of 2014, there really has not been any significant guidance at all in terms of substantive issues related to virtual currencies. The notice that I'm referring to is IRS Notice 2014-21, which, as I said, I believe was actually published sometime in March of 2014. So it's obviously more than 5 years since the notice has been issued. And basically what the notice says is that it reminds taxpayers that, and this is important, it reminds taxpayers that general tax principles, meaning Title 26, general tax principles apply to virtual currency transactions when determining tax consequences. So as an example, just like stocks, bonds, mutual funds, and other forms of investments for that matter, virtual currency is considered property, in quotes, property for federal income tax purposes. So as such, the general tax principles apply to transactions involving purchases, sales, exchanges, or other dispositions of virtual currency, cryptocurrency, however one wants to describe the particular item. But bottom line here is that general tax principles apply. There are some provisions in Title 26 that we as practitioners don't have complete clarity in terms of what provisions may or may not apply, and that's why we're very anxious for the Internal Revenue Service to come out with additional guidance. Prior to the letters being mailed out in July and August, we were hoping, and maybe it's still in the development stage, but we were hoping for a revenue ruling and a revenue proc to come out that would provide more guidance. But at this time, we're still waiting. But bottom line is, if you have any issues or any questions, you have to think of general tax principles apply.
Right, but they just seem so far behind on this that they haven't put out anything in 5 years, that this is so drastically and dramatically changing. Whatever, it's the government.
That's true. But on the other hand, and I appreciate this, being both working primarily in the controversy areas, but also certainly having an awareness of various compliance issues that I'm involved in whenever there is a controversy matter that I'm asked to participate in. It's a complicated area to some extent, Eric, and it's not as clear in terms of some of the provisions in the code. For example, would the wash sale rules apply? How is basis determined after a purchase is made? So it gets a little complicated, and I can appreciate that. But certainly, a little over 5 years is a long time waiting, and I know practitioners are anxious, and quite frankly, so are taxpayers, Eric.
Right. Now, I don't want to go. I don't want to force you to do the webinar now, but do you mind getting into those letters a little bit? You mentioned, I think it was 6173 is the first one you mentioned.
Yes.
What particularly about that letter, and in fact, actually, if you don't mind kind of going through them, what is really different from one to the other? So like 6173, like what is that?
And, it's interesting because each of the three letters, there is slightly different language and requirements. So I'll just touch upon, the broad aspects of each of the letters and then be able to distinguish exactly what the import is of a particular letter and what the consequence is of that particular letter. So with respect to 6173, what 6173, which is the first letter, I think it's the most, when I say most important, it obligates a taxpayer who receives the letter to respond to the IRS. And what the letter basically says as it begins its discussion of the content of the letter that the taxpayer is reading and or his or her practitioner is, the IRS says in very clear terms, Eric, we have information that you have or had one or more accounts containing virtual currency and which is important, and you may not have met your U.S. tax filing and reporting requirements for transactions involving virtual currency. That's an important statement, and you'll see how it distinguishes between the other two letters. But what's also important about 6123, it actually identifies, Eric, in the letter that there are specific tax years that the IRS has noted in the letter. For example, it will basically say, for example, make this kind of a statement. For one or more tax years, and they give the years 2013 through 2017, we haven't received either a federal income tax return or an applicable form or schedule reporting your virtual currency transactions. That clearly suggests the IRS has information, Eric.
Oh yeah, no. And so, you know what, Walter, it sounds very similar to the automated underreporter. Hey, we have information that we think you did not include in your return. right?
Correct.
You know, so here what they're saying is either A, you had this and you didn't file a return, or we don't have information that you included it
Correct.
with the return. So is there any, you mentioned that there's a requirement for the taxpayer to respond. What is the burden, not the burden, uh, what are the just a consequence. What do they want the taxpayer to do? Do you simply say, "Oh yeah, sorry, here's an amended return"?
No, Eric.
What are they asking for?
It actually goes beyond that. The letter 6123 A requires a very specific response or responses from the taxpayer, and I'll get into that in a minute. But basically, what the letter requires the taxpayer to do by a specific date, meaning there's a response date, which just to clarify also is that if a taxpayer and or his or her representative needed additional time to compile information that's responsive to the letter, a taxpayer can request additional time by way of requesting an extension of time to respond. But to your point about what specifically the letter requires taxpayers to do is, and these are either or depending on one's facts and circumstances, Eric.
Yep.
Number one, file delinquent tax returns and report virtual currency transactions that were not reported.
Okay.
File amended tax returns due to having made a mistake, for example, on a previously filed original return. Or, and this is all in this one letter, Eric, 6173, or mail to the IRS or e-fax a statement of facts explaining a reporting position that was previously taken, and then to provide more information to the IRS. It's interesting to note, Eric, and I don't know if it's relevant or not at this time, but it's interesting to note that the response address is the Philadelphia address, IRS. Yes, criminal, and also, of course, offshore voluntary disclosure and the current program. So you have those three opportunities to basically become compliant. File a delinquent return, file an amended return, mail or e-fax a statement explaining a reporting position and the history of that particular transaction. In addition to that, the IRS requests the taxpayer's current contact information. But here's where I really believe taxpayers should consider exactly how they're going to respond, what they're going to say, and if in fact the taxpayer has any doubt whatsoever about how to respond, I think a taxpayer should consult with tax counsel, because this particular letter, Eric, requires...
I gotta tell you, what's jumping out at me is this: when you submit this, it is an admission.
Well, that's exactly right. And here's the point that I want to make about it. The taxpayer must not only respond by a date certain, but also must sign and date this letter under penalties of perjury.
So one, to confirm that they got it, right? That sounds very similar to the structuring letters, that the AUSA send out, saying, and if you're listening and don't know what we're talking about, Walter and I have done a lot in this area, where what happens is the assistant U.S. attorneys, when something gets flagged at Treasury or FinCEN, a pattern of people, what appears to be structuring their checks, cashing checks or depositing in a way that would be trying to avoid the filing of a currency transaction report. That is a crime called structuring. But obviously one of the defenses from people is, I never heard of such a thing. So what they do is they send a letter explaining this, that they've noticed this pattern, please sign the letter, send it back. When this first started, I would get like 4 or 5 calls a month saying, I got this, what do I do? And I would simply say that what they're doing is they're educating you. Basically, they're taking off the table the defense that you can later claim you didn't know. Now you know. And now you know the government is watching you. So here, it just strikes me as very similar, Walter. What they've got is they got the letter. You now know that the government has the virtual currency, and you now know that they've told you and you've signed. So this idea that it was somehow missed or you didn't realize, that's off the table. But what is disturbing it's not so disturbing, but not surprising, is that you're going to have to now submit the information. And in the event they come in, Walter, and met with you and I, and we think it's criminal, I'm not really sure what do you do about it? I mean, if we walk through, client comes in and they've not reported it, it's not insignificant, and let's just say it's very intentional. You can't. It's too late to do voluntary disclosure. Government already
Correct.
knows about it.
Right.
You can't ignore it, right? I mean, you have to respond. So what the client is going to be left with, and I'm just going to head off the questions that I will eventually get from this, is what you're going to do is the client's going to have to hand over the information, and you're going to have to just hope that it doesn't go criminal. And I know that's a little bit, unless, Walter, you have any more bright ideas that I'm not thinking of. If the client, where I'm going with this, if the client committed this crime, yeah, they got caught. And there's no, I'm sitting here now thinking this through, live. I don't know that I have any brilliant ideas other than you cooperate and hope it doesn't go criminal.
I think that certainly is how I would consider it at this time, meaning consider the response. Because if a taxpayer receives the 6173 letter and the IRS expects a response, and the IRS expects a response that is truthful, accurate, and complete, under penalties of perjury, hopefully, and it's a hope, obviously, at this time, because we really don't know how these letters and the enforcement type mechanism attached to them will evolve. But when you think about it, Eric, you're absolutely right. You don't know what may happen. So if you fully cooperate, provide truthful, accurate, and complete information as a taxpayer and or the representative, and you're providing that information, perhaps it could be just as an IRS audit where an auditor asks for information. And quite frankly, Eric, and obviously as tax counsel, I'm sure you receive these kind of questions often, but is there really that much of a difference between a taxpayer making a verbal representation to an IRS agent that becomes or is determined to be false as compared to responding to this letter under penalties of perjury? In other words, as a matter of law, I'm wondering if there really is that much of a distinction between a verbal statement that turns out to be false, which of course is a felony or can be a felony, or basically just providing information, responding to this letter under penalties of perjury, where the information may not be accurate, truthful, and complete. And the other aspect of this letter, Eric, also is that the IRS may follow up and ask additional questions based on what was previously submitted. So the IRS can certainly have more than one opportunity, one more bite at the apple in terms of just fleshing out the truth about the taxpayer's positions with respect to virtual currency.
Well, yeah, and to answer your question, I don't think there's any difference. I mean, the false statement, the perjury, is the same whether it's in written form or verbal. I mean, written may make it a little bit easier for the government to prove.
Right.
We don't have the he said, she said, but here, what's interesting is often within like an eggshell audit, there is a strategy where we're not going to give the government the information. And we usually will do that where we believe it will be hard or impossible for them to prove the fraud without it. And that's always one of those, one of the things that we're always, you and I and the client are always going back and forth with on an eggshell audit is, do we take the position of cooperating, hope it stays civil, because they're going to find it anyway, or is it the kind of thing they're not likely to find, and our giving them information is only going to help them prove the fraud, in which case we may not cooperate. We may invoke the Fifth Amendment right against self-incrimination and all that stuff. Here, we have to assume they already have the information. So
especially as it pertains to letter 6173, I would think that that is probably a foregone conclusion.
right. And so I think at this point, and I'd have to think about it a little bit more. I think it's going to be cooperating and hope that they, in the end, it stays civil.
I would agree with you.
All right. So let's table 6173, or let's move on. 6174 and 74-A. What are those letters saying?
Okay, they're slightly different, and we'll talk about 6174 first. 6174 basically begins with a similar statement, but there's a little difference in terms of the parsing of the words. The letter begins, "We have information that you have or had one or more accounts containing virtual currency." That's in 6173. But then the next sentence, not the next sentence, but the next part of this sentence says, "But you may not know the requirements for reporting transactions involving virtual currency." You may not know the requirements. So here, this particular letter is basically saying to the taxpayer, we do have information, but you, for whatever reason, the IRS has tweaked this letter for a particular group of taxpayers that says, but you may not know the requirements for reporting your virtual currency transactions. The IRS, though, then goes further. So on one hand, you'd say, gee, they're giving me, the taxpayer, the benefit of the doubt. But what they also say in the same letter is, if you do not accurately report your virtual currency transactions, you may be subject to future civil and criminal enforcement activity. This letter, however, concludes with the following statement, Eric. You do not need to respond to this letter. So this letter basically is saying,
it's just like the structuring letter.
Yes, exactly.
Now, fascinating. Now I wish we could get Chuck on the phone. Well, you know what? Because do you have any sense on why they would pick one versus the other? What set of facts would you have in the one? No, 6173. I keep saying the one. 6173. I could see where they say, look, you've been filing your return and you've left this off.
Right.
6174. But I'm trying to make up what would be different between the two. 6174, people report it, but they report it inaccurately. But you remember, you also could have had 6173. Well, you know what? Actually, why am I guessing, Walter? What do you think? Why they would pick one versus the other?
Well, I quite frankly, I think what it comes down to, and I'm speculating with some informed judgment, but I honestly believe it just may be based on standard of proof, Eric, as a matter of law. When you deal with standards of proof, is something beyond a reasonable doubt? Is something clear and convincing? Or is it preponderance of the evidence? So perhaps these letters are drafted in a way that may account for the slight variations in language. That's my initial response. I think it may be close in terms of perhaps what the IRS has in its database about particular taxpayer, because they're essentially extending the benefit of the doubt to a taxpayer with respect to the 6174 letter by basically saying, you may not know the requirements. If you don't know, we understand that you don't know, but guess what? We're telling you what to do. You still need to become compliant. Go seek competent counsel advice, accounting advice, whatever you need to do to become compliant, and just do it. I really think that's really what this letter says, because ultimately, if you do not accurately report, as what the letter says, Eric, you may be subject to future enforcement action, which can be both civil and or criminal. So bottom line there's no obligation to affirmatively respond, but I believe there's an obligation to make sure you review your tax returns, review your virtual currency transactions, and determine whether or not you fully complied with reporting, because reporting is essentially based on general tax principles and the fact that virtual currency is essentially property for purposes of the Internal Revenue Code.
So really what the letter is go see your professional, make sure you're doing this properly.
I think for 6174, well, I think for all of them, quite frankly, but certainly 6174, there's, as I said, there seems to be a benefit of the doubt, but the IRS has information notwithstanding.
Okay, I actually, I was vaguely aware of the letters. This is fascinating. So now, what about the 74-A?
Right, 6174-A, again, slightly different. It begins with the same part of the sentence. We have information that you have or had one or more accounts containing virtual currency. That's standard in all three letters. Yep. This particular letter then says the following. However, or but is really the word that's used, but you may not have properly reported your transactions involving virtual currency. So here the IRS basically is saying, we know you reported virtual currency transactions, but perhaps you may not have properly reported your transactions. And now there is a couple of follow-up sentences that are important. If you do not accurately report your virtual currency transactions, you may be subject to future civil and criminal enforcement. That's the same or included in the 6174, but there is a slight difference that we'll just distinguish in a minute between the two. But this particular letter has a little different language at the end. This letter says, you do not need to respond to this letter, which is the same as 6174. However, 6174-A then states the following. It begins with, you do not need to respond to this letter. Then it states, however, we may send other correspondence about potential enforcement activity in the future. So that may suggest we may learn more about your transactions, but in the meantime, we really believe you still should become compliant. Contact your professional advisors, those that are competent in compliance, controversy, and enforcement, and obtain the correct advice, the proper advice that you need to have in order to be compliant. So that's the difference in the language. On the one hand, the 74, it basically says you may not know the requirements, but on the other hand, 74A basically says you may not have properly reported.
But the thing is, 74A, you did report. They just don't think you did it properly.
That's what the inference is. That's correct. Because with 6174, it basically says the taxpayer may not know the requirements for reporting transactions involving virtual currency, whereas 6174A states the taxpayer may not have properly reported your transactions involving virtual currency. My takeaway between the two letters is that I think, Eric, letter 6174-A suggests, and it's only an inference at best at this time, but I think it's a reasonable inference. I think 6174-A suggests that the taxpayer has knowledge about the requirements for reporting transactions involving virtual currency, but just may have improperly reported them. So I think from your perspective as tax counsel, you know, there's the issue of knowledge, and 74A I think suggests knowledge, whereas 6174 basically says you may not know the requirements, so therefore you should seek the knowledge.
It's almost like 6174A I'm feeling pretty good about, right? My client probably attempted to do this. We have to just look at it and review it, make sure it's right, or maybe amend the returns. 74, it's not sounding criminal, but we need to be concerned and we have to get it fixed. 73, I'm telling the client we got problems here. Yeah,
I think that's a fair summary just in terms of cutting to the chase for to educate the client. Because I really think what 6174 basically says in a nutshell, it suggests that the taxpayer may lack knowledge about the requirements. Okay, that's okay. I mean, so the letter is basically saying go out and obtain the knowledge. Whereas 74A raises the question whether the taxpayer knows or has reason to know that he or she has a legal duty to report the currency transactions because there's knowledge imputed. In either case, Eric, I think taxpayers and their representatives and their practitioners, whether accountants, enrolled agents, or counsel, I think taxpayers should consider erring on the side of caution by reviewing previously filed tax returns.
Yep. So, and Walter, just, as we wrap up, and again, I'm going to put the link for people to go listen in on the webinar next week, which I think is going to be very illuminating. What is sort of the takeaway, for practitioners listening to this? All right. I mean, we got the letters, is there something, if you had to give one piece of advice, what would it be?
Well, it's sort of, the way I think about it is, in terms of one piece of advice, I would say the takeaway is the IRS has information about a taxpayer's virtual currency transactions, and that widespread publicity about virtual currency transactions, whether it's in the media as reported in just in terms of articles, or these letters coming from the IRS, I believe widespread publicity rebuts any argument that a taxpayer is either unaware of or ignorant of the law, Eric.
I agree. I absolutely agree. And so, listen, Walter, thank you for coming on and giving us this. This is big. This is actually really, when I planned on this, I've just learned a whole lot. This is very cool. And so if you are listening, I will put Walter's contact information below in the podcast description. I'm also going to put a link to that webcast next week, which, Walter, I believe is free, right? You guys are doing?
Yes, it's free. There's no CPE attached to it, but it's only an hour. It's from noon to 1 o'clock on Thursday the 26th, and it's free. And I will be covering some of the same issues, but in terms of the webinar, I will be drilling down a little bit more as to some of the issues that we touched upon, but I think probably deserve additional commentary.
All right, so noon Eastern time on the 26th. I will put the link there. So if anyone wants to go check that out, register for that, please do. And Walter, again, thank you for coming on and doing this. I appreciate it. We are going to have you on. The original thing we were going to do is forensic accounting, and we are going to still do that. But obviously, cutting edge stuff, hot topics are always great. So
yeah,
thank you for coming on and doing this. And for everyone listening, thank you for listening in again this week. Go check out Walter's information below and the webcast next week. That'll be very interesting. And otherwise, thanks again for listening in and sending in your questions and your comments. And we'll see you next week. Bye-bye.
Bye now. Thank you, Eric.